The stock market is currently closed as of this Tuesday afternoon, December 23, 2025, but the activity surrounding Novo Nordisk A is anything but quiet. Looking at the latest data from the New York Stock Exchange, where it trades under the ticker NVO, the stock finished the previous regular session on December 22nd at $48.10 USD, marking a minor gain of about 0.02%. However, that figure is completely deceptive if you aren't looking at the extended trading activity. In the after hours and early pre-market hours leading into today, the price has surged significantly, climbing toward the 52.65 USD mark. This represents an intraday move of nearly 9.5% that has caught many institutional players by surprise. While common names like Tesla stock or Nvidia stock usually dominate the headlines with these kinds of double-digit swings, Novo Nordisk has just reminded the market why it was the darling of the pharmaceutical world not long ago. The expectation for most of 2025 was that this company had hit a wall, struggling to keep up with the supply chain of its rivals and facing a cooling sentiment in the obesity drug space. The reality, which we just learned through an immediate regulatory update, is that the FDA has officially approved the oral version of Wegovy. This isn't just another product launch, it is a fundamental shift in how this company addresses the massive global demand for weight management. By removing the requirement for a needle, Novo Nordisk is potentially bypassing the biggest psychological and logistical barrier to its growth. Most people watching their favorite investing sites or tracking their individual brokerage accounts have been conditioned to think the GLP-1 race was already won by Eli Lilly, or that the market had reached a saturation point. But if you look at the volume spikes and the way institutional orders are flowing into NVO this morning, you can see that the big players are recalculating their models. They're moving away from the idea that this is just an injection company and starting to price in a future where a simple pill can be distributed through standard pharmacy channels without the complex cold chain refrigeration that has plagued the supply of Ozempic and Wegovy for years. This creates a fascinating curiosity loop. If the logistical bottleneck is gone, does the valuation need to revert to its previous highs? For anyone using a Fidelity trading platform or a Robinhood app to manage their portfolio, the recent history of NVO has been a painful lesson in expectations versus reality. Throughout 2024 and much of 2025, the narrative was that Novo Nordisk was losing its lead. We saw its 52-week high of nearly 94 USD slowly erode as supply shortages allowed competitors to gain ground. People were moving their capital into other sectors, perhaps looking at the momentum in Apple stock or shifting toward defensive positions through Schwab Intelligent portfolios. The common belief was that the obesity market was getting too crowded and that government pressure on pricing would crush margins. But the reality we are seeing today challenges that. By securing approval for a 25 milligram oral semaglutide, Novo Nordisk has basically built a new moat. While competitors are still trying to scale up their manufacturing of glass vials and auto-injector pens, Novo is moving toward a traditional tablet format that is vastly easier to manufacture at scale. If you are currently engaged in self-investing and using tools like a SoFi robo-advisor or Interactive Brokers trading tools, you've likely noticed that the sector momentum for healthcare has been lagging behind tech. However, the institutional activity we are seeing right now suggests a rotation might be starting. Large-scale fund managers who utilize Fidelity Wealth Management and complex Interactive Brokers platform setups are starting to look at the enterprise value of Novo Nordisk again. At a price point around 48 to 52 USD, the price-to-earnings ratio has become significantly more attractive compared to the triple-digit multiples we see in the tech space. This is where the tension lies. The market expected a slow decline into a generic heavy future, especially with patents in certain markets expiring soon. The reality is that Novo Nordisk is choosing to out-innovate the patent cliff rather than just defending it. The daily swings we've observed recently highlight a massive battle between short sellers and long-term believers. On the Fidelity mobile app and other popular platforms like the Robinhood app, retail interest had dipped as the price stock languished in the mid-40s. Many people were checking their SoFi active investing accounts and wondering if it was time to cut losses. But the volume tells a different story. Institutional activity has remained surprisingly robust. We aren't just seeing small retail trades here, we are seeing blocks of shares moving through interactive brokers account channels that suggest the smart wealth is positioning for a multi-year recovery. They aren't just looking at the next quarter, they are looking at the 2026 and 2027 fiscal years, when the Wegovy pill is expected to be the primary driver of revenue. Let's talk about the business model for a second, because that is where the true long-term value is hidden. Novo Nordisk isn't just a weight loss company. For decades, they have been the global leader in diabetes care. Their entire infrastructure is built around chronic management of metabolic diseases. This is a recurring revenue model that would make any software-as-a-service company jealous. When someone starts a GLP-1 regimen, they aren't just a one-time customer. They are often a customer for years. This is why when you look at Fidelity ETFs or Fidelity mutual funds that focus on healthcare, NVO is almost always a top holding. The company has shown an incredible ability to take the profits from its older insulin business and funnel them into the development of semaglutide. In the most recent earnings reports, we did see some red flags that are worth mentioning. Sales growth for 2025 was narrowed to 8 to 11%, which was a step down from the explosive 20 to 30% growth we saw in previous years. This slowdown was exactly what caused the stock to drop from its highs. Management also announced a significant restructuring, cutting about 9,000 positions globally to save billions in annual costs. To the average investor looking for quick investing help or scanning investing sites, this looked like a company in retreat. But to the seasoned analyst, this looked like a company cleaning up its balance sheet to prepare for a new phase of competition. They are moving away from non-core research, like stem cell work for Parkinson's, and doubling down on their core strengths in obesity and cardiovascular health. This brings us to the future outlook, which is where things get really interesting for anyone involved in online investing. The approval of the Wegovy pill changes the math on global expansion. We just saw them launch Ozempic in India, a market with over 100 million people living with diabetes. In a region where the medical infrastructure might not support widespread refrigerated injection shipments, a pill is the only way to achieve true market penetration. This is the hidden growth catalyst that the market is only just beginning to price in. While everyone is focused on the United States and the debate over Medicare pricing, Novo Nordisk is quietly building a global distribution network that is far more resilient than its competitors. Before we go any further, I want to hear from you. Comment below with how many shares of NVO you are currently holding in your individual brokerage, or if you prefer to play the sector through something like Fidelity ETFs. Do you think the introduction of a pill is enough to take the crown back from Eli Lilly, or is the competition in the obesity space just getting started? Looking at the risks, we have to talk about the political landscape. The agreements with the administration to cut prices for Medicare and Medicaid are a double-edged sword. On one hand, it ensures that millions more people can access the drug, which increases volume. On the other hand, it puts a ceiling on the profit per patient. This is the tension that keeps the stock from simply returning to $100 overnight. Investors using Robinhood cash management or looking for high-yield returns might find the current dividend yield of around 3.6% attractive, but the real play here is the capital appreciation. If Novo can prove that the Wegovy pill has the same efficacy as the injection, and early data suggests it does, then the margin profile actually improves because the packaging and shipping costs of tablets are a fraction of what it costs to ship liquid biologics in specialized pens. If you are currently engaged in self-investing and using Robinhood fractional shares or a SoFi trading platform to build a position, you have to be comfortable with the volatility. This isn't a set-it-and-forget-it stock like some of the blue chips you might find through Schwab Intelligent Portfolios. It is a high-stakes clinical race. We are also watching the development of CagriSema. their next-generation injectable that combines semaglutide with another compound to produce even more dramatic weight loss. The expectation is that this will be the gold standard for those who need the most intensive treatment, while the pill handles the mass market population. In terms of market mechanics, we are seeing a decrease in short borrow fees and a stabilization in the short volume ratio, which suggests that the bear raid on NVO might be over. When the short interest starts to cover, especially on news as positive as an FDA pill approval, it can create a squeeze that drives the price up much faster than the fundamentals alone would suggest. This is why we see these 8 to 10% jumps in a single session. People who were betting against the company are suddenly finding themselves on the wrong side of a regulatory decision. As we wrap up this analysis, let's look at the central insights. The expectation was that Novo Nordisk was a legacy player struggling with manufacturing and losing its edge. The reality is that they have just successfully executed a transition to an oral platform that could redefine the entire category. They are leaner,